Hey everybody, and welcome to today's Trade Navigator session. I'm really happy to have with us one of Trade Navigator's long-standing employees. In fact, just recently, he's a little less standing than he used to be. For years, Pete Killman has been one of the main dudes over at Trade Navigator, but just I think in the last year, I'm not exactly sure the exact date, but in the last year he has kind of moved into part-time, and he has launched his own craft beer business. So if you guys want to learn about craft brewing, I think Pete is the local expert. But I have a really special place in my heart for Trade Navigator and for Pete. Back whenever we started in 2008, there was nobody that wanted to take us seriously because we didn't have any customers yet. And Trade Navigator, they said, yeah, we'll work with you and we'll take you seriously. And Pete was the guy that I first started talking to over there. So, we really appreciate our relationship with Trade Navigator. Not just the fact that they've always been really great in terms of a partnership with Tradesmart, but also just their software and the functionality of it. I've personally been Trade Navigator since 2004, and it's a really great software. It's stable. It works really well. You guys see me use it in classes. And, I'd realize that the criticisms come in, maybe it doesn't look as sexy as some of the other things that are out there, but I promise you it works really well, and that's the reason I keep using it. So a lot of you who are here today are probably already Trade Navigator users. Some of you are kind of kicking the tires to see what you can use it for. And Pete's today going to jump into some of the options functionality in their, I don't think it's an application, it's a plug-in, I don't know what you call it, but they've got an options, they call it Options Navigator. And that's what he's going to show you today. So, Pete, are you there?
I'm here, Jeremy. Thanks for the great introduction. And yep, we've been friends for a while, you and I and Josh, and I don't think I ever took you seriously, though. I don't know where you came up with that, but no, it's all
Glenn
good.
told me you did.
Oh, I'm just messing around. It's great being here today. I don't get to talk as much since I did resign from the vice presidency, but now I'm brewing beer and doing some webinars here and there and consulting more than anything. But when I heard Tradesmart University would allow us to talk with their clientele, it was an opportunity for me to actually talk to some people that know more about options than I do and show them some of the options tools. Maybe we get some good feedback, things like that. So this will be great. So as Jeremy said, my name's Pete Killman. I'm going to talk about Options Navigator. It is a separate software, but we call it a plug-in because you get to it from within Trade Navigator. I will show a little bit of Trade Navigator later on for some insider information, plug-in stuff, but for the most part, I'm going to be inside of Options Navigator. And I want to thank everybody. Thanks everybody for that's here for taking the time out to come check this out. We know time's valuable. The markets are open. You could be doing something. It's a nice day out here in Colorado, so we could all be sitting in the park or hanging out with our kids and stuff. But thanks for taking the time to hang out with me instead. Just a disclaimer. You can read this. Basically, you can lose money if you trade. That's a fact. Just wanted to make sure you guys understand that I'm not going to teach you guys methods of trading. I'm not going to talk about recommendations or anything like that anyway, but just in case it's possible I say something that could be misconstrued, let's not do that. In no way anything I discuss is going to be considered trading advice or recommendations. I'm not a trading expert. I'm more of a software nerd. And here is what we're going to talk about today. With your permission, today I'd like to go through all these things. It won't take too much time because I won't get too deep into these things. But Options Navigator, what it's about is the first thing right there. It's about properly managing your portfolio with a focus on risk and reward. You want to build and manage a portfolio. It's not just take every trade. If you trade multiple spreads or multiple legs, you guys probably know. These things are all related on how your risk is actually being managed. It's not just I take a vertical on IBM spread and then take a single or a condor and they don't affect each other. It does. And therefore, we're talking about building up and managing a portfolio of winning trades, knowing when you can profit, uptrends, downtrends, sideways markets. That's what the tool Options Navigator is all about. We're going to look at some visual aids to recognize that risk. We're to know how prices in your option spread change. Now, you guys, you guys are well educated. Tradesmart does a fantastic job in education. So you're going to know some things more than you're going to need to know for this purpose of this webinar. So that's going to be good for me. It's going to be easy for me to talk to you and show you some of the tools. But knowing how prices are going to change based on different things like changes in underlying interest rates, Greeks, we kind of give you aids that make it a little easier. So when you're moving on the fly, you can just look at it visually and see it happen. Alerts are important to me. I don't like sitting in front of the computer all day. Well, that's not true all the time. Sometimes I sit in front of the computer all day because I enjoy it. But I do like to, get a step away from the trading, step away from the chain, step away from IBM or whatever it is I'm talking about, and have alerts set up so that it can go, and let me know, email me, let me know, or text me or whatever, tell me that there's actually one of my setups is actually coming close, whether it be the bid or ask price that I'm looking for, etc. I'm going to show you how we reduce uncertainty in evaluating strategies together and combining them. So you can actually combine different strategies and you can overlay them on graphs and things like that to really just kind of say, well, this one looks a little better than that one. Maybe that's the one I want to go with, etc. Identifying overpriced, underpriced options, that's just part of volatility, looking at volatility, looking through different options, through different expirations, weeklies, things like that. We'll look a little bit at that. We have something called filters, and we have a screener that allows you to just kind of find the very best trading opportunities for what you're looking for in any market, and we'll show a little bit of that. We have calculators that allow you to know the probabilities of things. I'm not a big statistic junkie, but I understand how statistics can really help you, and so we're definitely going to be looking at the calculator for that. And then with those screeners and things, we're able to sort our possibilities, and so we'll show you how that works. And the average trade that it mentions there, the average trade is just basically in the simulation going through all the different possibilities based on Monte Carlo and all these other simulations that we have in there. It's going to basically tell you the average trade, which is on a, after going through 10,000 rolls of the dice, what was your average? How did your possibility come out? Your average profit, and what was your percentage of the time that it actually reached a profit? And the average trade includes losses as well, so sometimes it's a negative number. And you want to know those things. If you're gonna actually make a trade, you do want to look at some statistics and probabilities. One of my favorite things, we call it the time machine, but really it's we've got several years of options history, intraday options history, which is nice because then you can go back and look at chains from years ago, and maybe you want to start paper trading. Maybe the last time the market kind of crashed, or maybe you want to see how you would have handled the little bit of a crash we had the other day, or other week, I guess it was like last week or whatever, and simulate some of your strategies through that time and see how you might roll your options down with the market as it dropped, and just kind of play with that and simulate things with historical data. And then finally, I'm going to go into Trade Navigator just for a very brief minute about insider information. We've actually wrote some code to scan through. I mean, it's a lot of data, options data. There's just tons and tons of thousands of options on just any type of thing, any spread or whatever you want to look at. But then you start looking at or any underlying. You start looking at 8,000 stocks or whatever, say just a few thousand optionable stocks, and you start multiplying that. You've got so much data to look through. We actually have a thing that scans the market to identify some crazy volume type situations, and it's not just a spike in volume on puts or calls, it's actually other things in there, and we'll look at that at the end inside of Trade Navigator, how we wrote the scan and everything. So with that, I'm just going to go right over to Options Navigator, and I don't know, let me look and see if I have the question board open here. So I've only got one monitor. I had a problem with the computer, my normal computer, so what I'm using here is only one monitor. So if there's a moderator here that wants to interrupt me and let me know when somebody's asking a question that really is important to answer right away, or if anybody wants to interrupt and so they couldn't hear something, or if my mic's not working, go ahead and post that in the questions. But hopefully Chris or Shane or Sean, one of those guys who's probably in here moderating, we'll go ahead and ask you to go ahead and pause for a minute and read the question, because like I said, I'm only on one monitor, so it's going to be hard for me today. With that, let's go ahead and get right into Options Navigator. So again, this is a tool to do more than just look at a chain and make trades. You can do all that stuff, but really the whole thing was designed to properly manage your portfolio and also help educate. Because I know when I started learning options, it's just, I mean, I still need education on options. I should probably sign up for some of those Tradesmart classes, because I can tell you that those guys know abundance more information than I do. I mean, and I could learn so much more, but I kind of focused my attention on a specific strategy, so it made it a little easier. But there's just so much to options that I don't do that I could probably become a better trader with. Here's our custom option chain. I didn't customize it yet, but everything's there that you need. You got your options pricing, the actual bids and asks, or the the trades that happen there. The pricing on these are made up of basically 6 main things, and that is the underlying price of the we're looking at IBM, the underlying price, which is currently at the top. You can see it's at 145.54. The strike price, where your strike price is, and you can see our strikes are right here down this middle column, like this typical chain. Expiration date, at this time we're looking at October, which days to expiration is 28 days to expiration, which is important for me. I don't want to look at September on my personal trading. It's just too close. But some people love weeklies. There's some great strategies for that. Like I said, I haven't really learned a lot about the weeklies, because when I started learning options, it was before there was a lot of weeklies going on, if any. I don't even remember weeklies back then. Well, when I first learned, definitely weren't, but that was back in like the 90s. So interest rates are important, although they're not as important unless you're looking further out in time for your expiration. Dividends, if there's a dividend coming up and the price of the stock's going to drop, the amount of the dividend, you might see that reflected in your options pricing, or you should. And then implied volatility, which is also one of my favorite things to look at. Implied volatility, and you can see we have the Greeks here that are most important to me, which is the delta and the theta. I'm really into the verticals, as I said, so time decay, theta, and delta, of course, which everybody knows has to do with the amount that the option is going to change based on the underlying moving $1. And so those are all important. Up here, what you see, and I'm just kind of familiarizing you guys with this because it's a product that not a lot of people have seen at Tradesmart, I don't think. Or at least the clients, I should say. This is medallions. It kind of gives you an idea of what you're kind of looking for. So for me, we patented this technology. For me, it's great for education. So let's say I'm not familiar with a specific strategy. I can drop down this strategy. It's under the graph menu here. Right now we're just looking at singles, but I could drop this down and say, well, maybe I'm not. I'm just going to use vertical because I am, but maybe I'm not familiar with this vertical spreads as much, and I can see it, on the call side of things on the left, they're selling and buying, and you see how it changes. And then on the right we have the puts and selling and buying, and you see how it changes the medallions a little bit. And that's because it tells you this is a bull call debit spread. It's built of a long call and a short call. We know that vertical spreads involves the simultaneous purchase of one option and then the sale of another in the same month in a 1-to-1 ratio, at least the way I trade them, and it will consist of all calls or all puts. So in this case it's call. You look over here, these are all puts. And then the cool thing is, you can see right here it says debit, but these medallions also tell you, and if you get to know them a little bit, this is debit, that's a capped reward. You can see it's a capped risk, as verticals are. They're nice in that way. Your risk is capped. The outlook on this one in particular is bearish, although it depends. Sometimes you can actually get a neutral play because of theta, time decay, on one that you take for a credit spread. And then we have volatility. We're kind of neutral on that, and it just tells you it's an intermediate level play instead of it being a basic level. I don't even know if they have a basic level on these medallions, but those are kind of neat. Another thing that I like about the vertical spread, and you guys probably know, they're cost effective. Shorting a stock and buying a put, or doing a married put covered call is going to be more expensive or more not as cost effective because you're going to have to put more of your account into play. It's nice to have the limited risk as we talked about. You can use to play direction, or you can also collect premium. And think about it: if you sell an option that has a theta higher than the option that you buy, the time decay is more on the one you sold. Therefore, the price of the underlying stays exactly the same, but we gain profits through that time decay. So again, I love theta and looking at playing on the theta with these as well sometimes, because I don't know where the market's going to go a lot of times, and so being able to be right 2 out of 3 times, whether it goes up or sideways or down or sideways, is nice. Anyway, I won't talk much about the vertical at this point. I'm going to go right back into the chain. One of the things that's important to know is how things react, and there's 2 ways we do it in here. For one, these are all just, the basic chain stuff, but if you go into the settings in here, it's kind of cool because I want to see how prices change with changes in volatility, dividends, underlying price, and that's what we have up in here. You can actually set up a custom delta. You can set up custom implied volatility, custom theta, what your custom price is for the option is going to be, or the spread, and just set this stuff up. Like I said, I'm not a big gamma guy, not that it's not important. Some people are, and I know people that know way more than me about options. Vega, stuff like that. I could put those in there, and then I could actually set these, change the underlying price, and see how it would affect the spread. So right now, like I said, let's say it went up to 150. We should know kind of a little bit about how it's going to affect the spread anyway, but we can also change volatility and how that affects the spread, things like that. But it's nice to just be able to do that and see the entire chain and see how it affects it with actual prices. So you can see here, the delta is changing just a little bit when it went up a few dollars on the underlying, where you can see here, and it depends if it's on the put or call side. In the money is in green, shading. Out of the money for the call sides over here, out of the money on the put sides over here. As the chain goes up, and you can see that's the spread. Oh, another thing I like about it is sometimes I like a bigger center, so I could do like a a two-strike center. So now it's 125, 135, 130, 140 instead of it being what it was before, which was just $5 apart, 1 strike apart, I should say. And so that's where we're going to get to know, changes. But actually, what I like to do to learn and educate myself a little bit is look at the graph, because you can look at a graph of delta and see how it just looks when it goes over different prices and things. And we'll look at that in a minute. One of the things that's cool is alerts. I like setting alerts. To set an alert, it just tells you right there. I mean, you want to click on the bid or ask. You can actually trade or paper trade or get a ticket or analyze things. So if I wanted to kind of analyze something right around the money here, buying this bear put spread, and you can see it's a bear put spread. If you're going to go ahead and buy a spread with a short put and a long put, and then you can see how the risk graph looks, and you have a ticket that comes up. But the other thing you can do is right click on it and say, you know what, now that I want to look, I want to set an alert for this. I got to set it to a different broker because it. There we go. I set the other broker to be off so that I don't trade. Okay, so here we have IBM spread, and I can set it up to say, well, when the price gets to whatever, or maybe I'm looking to see when the asking price happens to be less than a certain price, because right now it's set up at 4. Maybe I want that asking price to be more close to the middle of those two. And you can also set up, when you go to buy it, you could actually set up a limit order to buy it when it gets down to a certain price, etc. But you can send an email, play a sound, display a message for whatever you want to do with the alert, and there's the alert. You can delete it, edit it, etc. But it's just a nice thing to have there. And then you get a message that tells you the details. So going to the analyzer, which is, it's your graph here. It's a pretty cool graph because it's got 3 different lines, and it's got some settings that can help you out with the same thing we talked about, which is see how things change when the underlying price changes, see how things change and the deltas and things like that. We've got this what if line, and that's this column on the right. It says what if. So this is where you drag your underlying price. What if the price happened to be at 154.60 instead of where it's at 145 or 161? Well, that's the break-even point. Sorry, the last price, which is 145.54. And you can see it's different column. It gives you a whole different set of numbers. I kind of moved that up pretty far. You know, it's a pretty big move. But let's say if we were to just go a couple dollars higher, because that's more realistic, and you can see how that affects some things in here. Shows your break even, that kind of thing, zoom in, zoom out, blah, blah. But the other thing you can do is you can change your volatility and see how the adjustable line, well, what's the adjustable line? The adjustable line is the yellow line, which is the date. So right now it's set for October 12th, but you know, let's do the adjustable line earlier. You know, where is the price affected if it, you know, if things kind of stayed the same, and today's the 18th and we got in this trade and we go out a few days, then you can see our break-even point is a little bit less, but at the same time we can see how even if we go up in this price, it's not going to be as profitable because we didn't give it as much time in this case. And then of course there's the current line, which is the pink line. So time in this case is in our favor up to where the strike is at 150, up into about 150. It's kind of a nice thing to do with that. But another thing I like to do with this is look at things like how does time decay affect, how does time decay work with price. So at our current price, time decay, there's no time decay right this second, but as the price goes up, you can see how time decay gets affected, and as it goes up even more, it's not a straight, it's not a flat curve, it's not linear moving. It's the same thing with looking over at, say, like just looking at the delta. You know, the way the delta works, as you get, you're going to have the delta go negative as you get up into this area here in the middle, but then it's going to come back as it gets past a certain point, and it has to do with the two strikes that we chose. But let's say you're not familiar with the strategy, and you're like, you know what, how does the delta get affected on something like Iron Butterfly, your favorite rock band from 1975, which is, I don't know if anybody would ever say that, but I did have Iron Butterfly on vinyl, believe it or not. But and that's different. It's a little bit of a different delta graph on how that gets affected. You can also go back to the price chart, and you can have a probability. So there's just all these tools. It's kind of a cool little graph chart that we have in there for people, for educational purposes as well, for kind of just after I've been looking at the chain and looking at the charts and looking at everything for an hour, my brain's a little fried. I just like to double check visually how things are going there. You can set up all these things on the ticket and submit or park your order. I won't get into that. It's a basic ticket there for, well, everybody knows how to use a ticket, I think. What I do want to talk about in the graphs is actually, maybe I should, let me place a couple of quick tickets here. So I'm just going to click this one. I'm going to go ahead and park it. And then I'm going to go to a different one. I'm just going to take a single leg and just do like a 160 single leg, and go ahead and park that, because what I did want to show you in the portfolio was right now you can see how we come into this risk here on IBM, and we'll go to just the basic risk graph here, P&L graph. But there's other, if you look at the bottom, there's some more spreads. And this is actually really important to managing your portfolio. If you've got IBM, I mean, look at this. I've got this IBM 160 put here, and I got this IBM 160 put there, and two different spreads. So, you know, you might essentially be flat. I'm not going to you might be flat that particular because you've got it both in this spread and another. So what's cool about this is overlaying, adding this in here, or analyzing it and actually combining it with the other spreads so that you kind of get an idea of how it affects your spread entirely if you have two positions. And you see it changes the way things look. This is not just the single, It's combined, and you can combine all your different ones on IBM. And the way that you'd want to do that is ones with the same expiration. So I've got an October, an October, and an October, all on IBM. What does my risk graph really look like now that I've got myself into this web? And you want to look at this before you get yourself into the web. I actually just did it for an example, but you can see how your risk looks when you combine everything, and that's important because now I've got a lot of risk on this downside below the break-even point of 159.49, but I don't have much upside because of the web that I built for this example. So it's a good example of probably what not to do, but it's really important to compare risk graphs in an overlay as well as to combine them in the same overlay so that you know how adding or removing a leg is going to affect your risk before you actually add or remove it. So that I want to kind of show that. Everybody's familiar with volatility, I'm sure, historical volatility, just looking at how much the stock moved historically, how volatile it was. And then in theory, implied volatility is what the marketplace is, and implying the volatility will be in the future. And it's based on what the price to option is at. And you can look at these things and kind of identify overpriced, underpriced options, comparing historical and implied, and there's some strategies you can do with that. I think volatility, implied volatility, is very important to trading an option, no matter what your strategy is that I can think of, but I'm not, like I said, I'm not an option expert. So again, another theory is that, let's talk about statistics. 68% chance that a stock trading at $50 with an implied volatility of 20% will cost between 40 and 60 bucks a year later, right? And that's just using normal distribution. I'm not looking at logarithmic distribution. I'm just using that as a simple example, but I'm not a statistics expert. So for me, I'm not just looking at and overlaying these volatilities, implied and historical type volatilities, and the skew and the smile and how things kind of work going out, say, with different options and things like that. And the smile, they call it. But I also like to go to the calculator, and I kind of want to get an idea based on where the volatility is. So if the implied volatility is 21 right now, and it's correct, let's just assume it's correct, and in its assessment of the future, or close to correct, what are my chances to get up to, say, 160, and what are my chances of dropping down to, say, it's at 145 now, so that's like 15 points, let's say 130, and just make it an even strike number, and this will calculate what the chances are 21 days, but let's say I want to go out even further. Maybe I want to go out, let's just go all the way out to like the 20th of November. 64 days, in the next 64 days with this type of implied volatility, or if that was to be the case where the volatility does happen, what are my chances to exceed the upside, downside, or actually stay or remain 64 days from then? And there's your probability charts at the bottom, but I like just simply looking at numbers. I mean, these are cool charts and all, but you can look at these numbers and say, wow, the chance that it'll ever exceed either is 58%. That's a 64 days left, though, and that's it's good to know these types of things, because if I was looking at an option that expired 24 days from now, would it be better to take a credit or a debit spread on something like this? That's a pretty big wide spread, though. Maybe I was going to do 150. Maybe I would do only 140 on this. And so I'm looking at my spread going, that's a pretty, that it'll exceed either one in the next 24 days. That's a pretty good chance that it'll exceed ever, a 93% chance. So do I want to take a credit or a debit? Do I want to ignore the stock? I mean, these are all important things. So I like the calculator a lot. It helps me know probabilities. And it's based on implied volatility. I can put whatever number I want in there. I mean, these guys, these experts that make all these prices, they don't know what they're talking about. IBM's going to have volatility of like 50%, right? Then it's a really good chance it's going to go above or below those two numbers. So I like to review probabilities and find the best opportunity that way. But I think it's better one other way I'll show you in a minute, which is to scan for them. And we did talk about that 68% chance with the normal distribution of the standard deviation, right? So a stock will stay within about plus or minus one standard deviation of the price about 68% of the time. That's what I was trying to explain before. And this can figure out potential range of movement for a particular stock or underlying. But let's keep in mind the crash of '87. It was like a 20 something standard deviation move. I mean, so just because it's normal distribution doesn't mean it won't blow it up, and that's why I do like the verticals, because they're pretty safe. There's a limit on what you can lose. It's capped risk on those. And the time machine's kind of cool. We'll show that in a minute, where we can see how we would react with such things. So there's two different ways to filter. There's something called the outlook, and then there's something called the filter. Now the outlook is, I just want to look at IBM, and with the way volatility is set up, with the way the underlying price, the way options are priced, all the different things that you can look at, maybe I like certain types of strategies. So I'm looking to say I'm willing to take everything all the way up to advanced. Maybe I want to look only for things that are neutral, bullish, and maybe I'm not very bearish on IBM. Maybe I looked at the chart and I thought, well, it's rolling up and down, now it's kind of at the bottom of the hill, it's ready to go back up the hill, or maybe I don't, maybe I choose something else. But for the example, I'm just going to choose bullish and neutral. Implied volatility prediction, I'm going to basically say it's actually bearish, maybe because we've had a lot of movement lately or something. I don't know, I'm just kind of making stuff up to show you an example. I do like capped risk. I'll take capped or uncapped reward, but that's not necessarily always going to happen. And then the return, maybe I really like credit return, and then these are the things that I should show. So this is kind of cool, because I can say, okay, this is how I feel about IBM, this is how I feel about what type of option I want to get. And so because I know I want capped, this is what it's going to tell me. It's going to say, well, Pete, and these are your strategy choices that we recommend. A long iron butterfly, a long iron condor, or vertical bull put spread. I don't generally, as much as I like iron butterfly, the band, I don't generally trade them, but I'm not, that's just me. You guys might. So maybe if you're new and you want to test it out and check it out, or maybe if you've never tried it and you want to try it, this will help you filter that. So this will find all the options with a max spread body width of 4. We can change that if we want. We could do wing width if we wanted to, but I'm not going to put that on. I'll just use the defaults. Max days till expirations, let's go with 60, and let's go as low as 20 on these expiration dates. We could look at deltas, probabilities, things like that. Let's see what we get. And what this will do is it'll look through all the different option choices in these 3 strategies that we checked, and it'll come back with a list. And the things I like to do, first of all, when you're trading options in the beginning, I know I blew out an account back in the 90s because I was so excited about how I could have less risk and blah, blah. Yeah, well, I just basically peeled the Band-Aid off slower because I was losing a little bit at a time. I just had no idea. I didn't even understand what delta was. I didn't understand a lot of things. But one of the tools I didn't have is I didn't have the ability to scan through and actually sort by expected profit. And if you look at all of these right here in this particular example, the probabilities of profit are good, but the average trade, which is what your expected profit is, after you take all the times it simulated 10,000 times, and it said, out of 10,000 simulations, take every single profit and loss, add them up together and divide by the 10,000 runs. On average, you're not going to make money. 90% of the time on this particular strategy right here at the bottom, you would have won money, but on average, if you roll the dice 10,000 times simulation with Monte Carlo and all those things, on average, because you're losing more money than you're winning, you're finding a strategy where your expected trade profit is going to be negative if you did this, 10,000 times in a row. So these are tools I didn't have. I didn't know that, wow, I got this great strategy, I got a 60% chance of winning, but I didn't have any way back then to figure out that, yeah, but when you win, you're only going to win $1. When you lose, you're going to lose $10. So 60% doesn't look so hot. And I didn't understand options well enough to do that. So these are kind of tools that Man, I wish I had back then, but now I have them, so it's pretty cool. And then that was just the outlook way. This is the filter way. If you kind of know what kind of strategy you want to trade, you could choose something like I do, like a vertical. Maybe I'm doing a call, and so here we have it, a long call type spread, vertical spread, and we want to default the maybe I want 2 strikes instead of 1, so instead of $5 on IBM or whatever stock, some strikes are bigger and smaller, as you know. We want to be around the money within like a couple of strikes maybe. And then we could choose things like I want the delta to look like this or the theta to look like this. Dates to expiration between, let's go ahead and do what we did before, between 20 and say let's just do 45 days to expiration. Maybe I want probability or expected profit to be between $0 and $100 and try and get something like that. And we can run the scan and get results, or we can add more stuff. But I'm just trying to show you kind of that this is here. This will tell you how your favorite option strategy is going to, this is going to tell you and give you realistic expectation about these behavior of your price of the option. Instead of it being like I was in the dark before, it actually gives me more of a realistic look to say, well, realistically, my expected profit on the ones that I happen to choose, the best bet right here happens to be ADC. This looks through all the different stocks. Well, let me look at that. Let me look at that graph, or let me park that. I can actually analyze that in a graph, or I can park it and see what that looks like. And then I need to go look at that and look at the chain and say, well, is there actually open interest on that? Which tells me, is there actually people in this market? Is there actually volume on this? Because sometimes it'll find stuff and you're looking at it, wow, that's a really good chart. And you go look at it and you're like, wait a second, there's no open interest, there's no volume on this. It hasn't traded in 2 days. So there's something funny about that, and I don't know that that's going to be possible. But it's a good tool. Eventually you find something more realistic for your trading. I didn't put that in. I should probably put things like that. Like you can actually put in there option liquidity and say it's got to have some trades, it's got to have some volume, it's got to have some open interest, things like that. So that's something you could just put right in here. Open interest volume has to be greater than 0 or has to be greater than so many shares. But I wanted to kind of show you that so you can find the very best opportunities instead of just guessing like I did. Let's talk about the time machine. I'm going to move on to time travel. I guess it's called time machine, and it's got a little time travel button. Really, it's just a way to access historical data. So you could go back in time wherever you want. We can go back to, say, July 9th, and we can select whatever symbol we want. We've been talking about IBM, so I'm just going to keep using it as an example. And this is what the option chain looked like on July 9th for IBM. And again, this has intraday options history years back. It allows us to simulate or paper trade in the past to see how we would go through a certain time. We look at a chart, say on IBM, and see a huge move. How would I have handled that if I was looking at it historically? Maybe I look at the chart and say I was bearish, but it had a huge bullish move. What would have happened to me at that time? And it allows you to kind of simulate your way through the storm, kind of like flying. Jeremy and Josh both fly, so I'm sure they've had to simulate flying a little bit. And what if they took simulations, and they probably have, when there's a huge lightning storm they're flying through? It's kind of cool. Well, I can go look on the chart and find a huge lightning storm for IBM a certain time, pull up that data historically, and then I can actually trade that. So, well, that's 2014. Let's go forward some. July. I don't know why that's not showing up, to be honest with you. I'll have to talk to tech support myself. But we want to simulate through not only easy times to trade a spread, but also look, how would I handle a spread through a tough time when there's a huge move against what direction I thought might happen, etc. Because you can just basically add to your position, overlay your positions, really analyze the risk, and put it in there through the time machine as well. Here we have, so let's just look, this is May, so let's say we were looking at June options here, and we wanted to look at June options for a vertical spread, and because we saw something on the chart, you can see the actual spread is only 2.5, so I'm going to increase the strikes 2 strikes to make it 5. We can place something in there. We're not really submitting a real ticket. We're just historically putting in as if we're in this position. Here we are in this position historically, etc. So it's kind of a cool tool. I can go forward and see how that affects things. Where open equity is 21, negative $21 on this. So now what happens if I go out, you know, through that storm? Let's say the storm happened and then June 4th came, and we can see what happens to that portfolio as we build upon it, remove from it, whatever we want to do. The last thing I want to talk about, and you see our open equity hasn't changed, but the last thing I wanted to talk about was actually in trade nav. So I'm going to go ahead and close this down now. And you guys can ask questions. I guess we haven't had any questions. I'll go look at the question board in a minute. Unusual options activity or insider trading. What we've done is we've built something to try and find unusual options activity to identify some key breakouts. And we use a proprietary screener. And you can see there's, you know, some weird spikes in volume. Here we had, you know, this market right here, and the dividend wasn't coming until over here. I'll try and blow that up so you guys can see better. And we're looking at IBM again. I made it easy so I don't have to keep talking about different stocks. You know, you had a spike in the call options volume on the 720, and then the spike increased even more as the call options volume decreased. The put options volume had a spike that went up even further on the 21st, and it probably maybe because the price dropped or something, and therefore we did not flag this as unusual. I know it looks like a spike because it was a spike in volume, but it was on both sides of the ball. It was on defense, offense, whatever you call it, put op and call options. So we didn't flag that. We do flag stuff with this screener we have, though. And if you look at our symbol grid, these are the two that are currently flagged, LNCO and Williams Partners on the New York Stock Exchange. So they're flagged for some unusual activity currently and options going on. But if I go back in this chart to look for a time when we had a spike that was flagged, it'll show up in yellow because I made a little highlight for that. And this is just part of the Trade Navigator, that people that have stock data and options data can find these things. Here's where we had an unusual volume activity. We had a drop in the market. So there was a big drop in the market for IBM, and there was a dividend too, but the dividend was 65 cents. So on a 65-cent dividend, we had a drop in the market and then a pullback that went back up. Still, it was a pretty big drop, even just looking open to close, ignoring the low. You know, we went from 113.27 down to 104, but we even closed at 111, so a $2 drop. And then the next day we had to continue to have a drop, but we had some unusual call options activity going on in the midst of this down move. Why is that? Well, we don't know why. We don't know who has insider information. We can't tell for sure that it was insider information, but with the scanner we have that scans through all the options, looking for some weird volume activity, we flagged this and said down move, interest rates are like this. We look at a bunch of stuff, and we had a yellow flag come up and say, hey, something's going on. Why are we getting such a spike in this call options volume right when the market was coming down like that? And it could be people selling, you know, options. You know, I'm not saying necessarily it's a bullish situation, but I do want to say that we flagged it, and then of course the market had a pretty decent up move to react to that down move after that dividend date. So that's what the unusual options activity scanner does. It's actually called options volume spike, because programmers, as you know, they name stuff. Sex appeal, man. Didn't Jeremy bring that up earlier about sex appeal? Yeah, there's not a lot of sex appeal in the software. Well, our programmers care about actually making tools that work, that help you, and care less about sex appeal. So that's why they call it options volume spike, but in reality they should have called it unusual options activity or something like that. In my opinion, they should have called it something cooler, but whatever. That's it. That's all I wanted to talk about today. Again, thanks everybody. I really appreciate you guys coming in. What I'm going to do now is I'm going to try and open up the question board because I didn't hear any questions. Let me see how I open this up here. Bam, let's open that up. How do you download these handouts? I have no idea what handouts you're talking about. Good drink.
On the handouts, I took care of that, so you're good on, Peter.
Is there any questions I need to answer? Should I start at the bottom instead, or?
Some of the ones that some of the people have is Cheryl is asking, can you give us the prices of your packages? And I don't know if you have those listed on your website or not.
We do, but we're actually doing a special, and I'm not a sales guy, or I probably should at the end of I should open up like a PowerPoint and be like, here, check out these specials now, buy now only. But no, yeah, we are doing some sort of a special. It's like 99. Usually we charge like, I don't remember if it's 129 or whatever because I'm not in sales, but for $99 we have real-time options and stock streaming with the Options Navigator and the Trade Navigator software. This, of course, as you see in the top left corner, I want you to note it says Tradesmart Navigator because I use the Tradesmart Navigator myself, believe it or not. There's some extra stuff that you guys built that I get in there. It's kind of cool. But yeah, it's like $99 a month if you want streaming data along with the Options Navigator and the Tradesmart Navigator at the same time. Any other questions? I'm sorry.
Let's see. Bob is asking, how do you access Option Navigator? Is it from within Trade Navigator or is it separate?
It is from within Trade Navigator, and it's a good question. There's an option chain button that I have up here. So once you have your Tradesmart Navigator, you should have an option chain button if you have access to Options or Options Navigator. And by clicking it, it opens it up. And there, I just did it there. We also have some really cool tech support videos and stuff like that. We've got live on-the-phone tech support. So if you ever, no, I don't want to, I hit the wrong X. If you ever want to get support and help on any of this stuff, these guys are really good about helping on that kind of stuff. So, but yeah, you just click the chain from within Tradesmart Navigator.
Okay, looks like on one of your slides, Leo is asking, what does the green diamond with the D inside mean that was on your graph? I don't know if that's too late for you to reference.
No, it's right there. I think it's right there, right? The little D right there. I think he's
speaking. That's dividends,
yeah.
Isn't it?
Yeah, that's dividends. We have stock splits and dividends on the chart for you to know when there's dividends coming up as well as dividends in the past. It's important to know dividend dates because option pricing, as we talked about earlier, does depend on dividends. If you're looking at an option price and you think it's overpriced because you're like, wait a second, I'm looking at intrinsic value and I'm looking at time value, where's this extra $1.10 coming in? Well, sometimes, well, they should almost always, if not sometimes, that I've seen, the dividend will be built in there, knowing that a put is going to be, you know, $1.10 different coming up on. In this case, it was on 226 or 26. So your February expiration for an option should include that dividend in the price of the option, the actual price of the premium of the option, I should say. Does that wrap it up?
Looks like it. Let's see. On Charles is asking, does the Gold Trade Navigator include the Options Navigator?
The Option Navigator, I'm pretty sure, is actually more of a monthly subscription because what it is you have to subscribe to options data in order to get that, and so I think it's part of the options subscription. So it doesn't have to do with Gold or Platinum. It's more about the data subscription. Options Navigator comes with the option subscription.
Right. I just spoke with Jamil, and I believe he was telling me that it is not included in the Gold, but it is included with the $99 package that you folks are offering the Tradesmart students.
That's right. That sounds right to me. I should call Jamil too.
By the way, I just did post Jamil's email on the pane, so if you have additional questions, hope I spelled Jamil's name right, Jamel.
It's actually Jamail or something like that. He's in sales, so there's other people too. So you can email him, or you can actually email sales@tradenavigator.com, or you can email support@tradenavigator.com, or billing@tradenavigator.com, depending on what kind of question you have. If it's more of a technical question, like what's the little blue Diamond or whatever, you're probably better off emailing support@tradenavigator.com. But if it's like a sales question, like how much is this and what includes in gold, and then you want to email sales. And then if it's billing, like how come you billed me last month when I paid you for an annual, or how come your prices are so inexpensive, you can email billing at tradenavigator.com.
Okay. Peter, would you like to tell our students about the coaching that you folks have available?
Yeah, absolutely. It's pretty cool. We have free one-on-one coaching for anybody that is in a trial or happens to be a subscriber to our service. And the reason we have that is we know that once you learn how to use these tools, you're going to actually be addicted to them. We get guys in, they take the training, they get through the coaching. It's one-on-one. You tell us when you're available to learn our software, and then you get one-on-one live person with you to coach you through whatever it is you want to learn. And by the time you get through a couple coaching sessions, you're locked in. We don't lose clients very often once they get into some coaching and they learn how to use these tools because they find them invaluable. So it's a good program we have for free.
Does your software allow custom scripting?
Yes, it does. I didn't want to get into TradeSense, but it's actually one of my favorite parts of the software. I'm kind of a geek that way. So if I wanted to write my own backtest strategies, I wanted to write my own indicators, functions, highlight bars, I could do all sorts of statistical stuff. I mean, I actually taught like a 3-day class on that stuff alone. I mean, it's so detailed what you can do. But the cool thing about it, it's actually in English. And there's actually something called a condition builder that allows you to kind of learn the language by just clicking on like indicators and deciding, and then it'll show you what the language would look like had you coded it yourself instead of just clicking through the chart and stuff. So there's all sorts of stuff there. And we have free one-on-one coaching for that as well, if you want to learn more about that.
Yes, I know I did. I was looking for some information on your tech guys helped build it for me, so they've been very, very helpful. Some of your students here might be interested to know who's using your software, and I have found that on your website it lists several World Cup champions using your software, that your software is their choice. And I think that's important for people to know. Bob Pritchard uses your software and other trading champions, so it is a highly respected software.
It is, and we don't advertise. We've always depended. I mean, we've been in business since 1983, and I've actually worked here since 1997. I was in tech support in August of '97, and I kind of worked my way up to vice president, and then I started making beer. Now I resigned from that spot, but we've been in business a long time because we've had world-class clients using our software and respecting our data. It used to be we were known for the best data. As you know, not all data is equal, but one of the things we did over the years is listen to those world-class traders when they said, hey, it'd be cool if you did this. And we were like, yeah, let's do that then. Because, we wanted to make sure that all the tools were there for world-class traders that we can also share with the traders like myself. I'm not a world-class trader, but I do like to trade. So.
Okay, yeah, that's excellent. Now, see, John is asking who can I talk to about system requirements. I believe you said he can email support@tradenavigator.com. Is that right?
He can. I mean, they're pretty low requirements. I mean, the laptop I'm on, I bought like 4 years ago. It's a T520 ThinkPad. It works great for what it's been working great since I got it. It's a Core i7, which isn't new technology anymore. I think it's only got 4 gigs of RAM. If you've got I mean, I've used this on even a smaller computer than this laptop, but when I travel and stuff, I like to have a little bit better computer. But I think it's about 4 years old, so you don't have to have any of the latest, greatest. If you're looking at doing a lot of visual stuff, say you want to draw, like if you're one of these Fibonacci guys who likes to draw 20 different Fibonacci lines and Andrew's pitchforks and 1,800 trend lines on a chart, then your video card will be more important to you than a guy like me. I don't draw as much. I might draw a few trend lines here and there.
Okay, real good. I have a question coming in from Bob, and he's asking what brokers do you currently work with?
We work with a lot of different brokers. I know that the most popular one is probably Interactive Brokers. Man, I haven't answered that question in a long time.
Do you guys have a list on your website for that?
We do and we don't. We have a list on the web. .com. You should go under No, I don't want to sign up to learn more because I work here. Let's see. Partners. The website's always changing. You'll see broker partners. I mean, Tradesmart is under educators, but these are some brokers. A lot of them are futures, so that's why I brought up. IB Interactive Brokers. Notice Interactive Brokers. There it is. It is on there. Okay. Some of the brokers we don't have on there, but there are. But so I would suggest like, and there's also something like an interface. So you can actually interface to a different broker. Like if you wanted to use a certain broker and they happen to use CQG as an interface, and you'll see at the bottom, these are broker bridges. So you can actually connect with PATS, Rhythmic, or CQG to a different broker than might be on the list because it's kind of a connection between the two, the software and the broker. So.
Okay. Cheryl is writing and asking, can more than one device be open? I think what she's asking is, can you use Trade Navigator on different platforms such as your smartphone, the PC, and what kind of devices can Trade Navigator be opened on?
Okay, so yeah, Trade Navigator or Tradesmart Navigator and then Options Navigator, they can be open on multiple devices. That's not the issue. It's streaming data, because the exchanges are real particular about having streaming on more than one machine at a time. So when you start to connect and stream to your computer, it'll disconnect, say your desktop is running streaming. It'll disconnect the streaming on your desktop if you connect on your laptop with a single streaming account. But as for like end-of-day purposes and stuff, that's not an issue. So you'll be looking at like end-of-day data on your desktop and then you stream on your laptop at the same time. That's not an issue. But the exchanges want their exchange fees, so they make sure to put in rules that you have to disconnect any streaming so that you only have one streaming at a time.
Right, okay, so I think that answers Cheryl's question. She's basically asking, can it be open on more than one computer at a time? And I believe when I had that experience, it can, but you need to upgrade to that particular level. Is that right?
You can have it open on 3 computers at a time. It's just the data itself coming in. There's end-of-day data where you can look at the chart and it's not updating live, and then there's data like right now I'm streaming or I'm not streaming live. So if I were to connect to streaming live on this computer, the other computer would end up looking like this, where it's not live streaming. Like if I click on live streaming now, you'll see the prices start to update. My desktop computer, which is the one I was originally going to use, it will disconnect the streaming on that computer, and it'll just go to end-of-day data at that time. So you can have it, yes, you can have it open on multiple computers. It's just the data itself won't be updated live on more than one computer at a time.
She says, yes, that was it. Thank you.
Okay, great. Sorry, I'm not very good at answering certain questions.
Well, I think that's it. Does anybody else have any questions for Peter? He's very knowledgeable. He's been with Trade Navigator for a long time. He is definitely the gentleman to ask questions of. Well, I see a bunch of thank yous coming in. Very informative. I appreciate that. So, Peter, I think that's it, unless there's anything else that you would like to add.
No, I just want to say thanks. Thanks again for taking the time to come here. Like I said, it's a beautiful time of year. I love the fall. Everybody, I think most people love the fall. I love the spring and the fall. It's my favorite times of year. And we could be outside right now, but instead we're in here with Pete. So I appreciate your time. It's really, really kind of you guys to show up. And thanks again. And I wish you all the best of luck and good trading in your future. And we'll talk soon. Thanks, guys. And thanks, Tradesmart, for having me.